Good morning guys. Today we are going to start about topic financial accounting. In this lecture series we are going to cover the following points. First, that is what is an account. After that, users of accounting information, accounting cycle. After that, attributes of account, functions of account, branches of accounting, classification of account, and last but not least, that is rules of account. So let's start one by one. First of all, what is account? So in our day-to-day life, we know about the account. Account is a summarized record of business transaction in a set of books. We call it as account. But nowadays, business is growing very fast and everybody knows about the account. So what is the account? What is the debit amount? What is the credit amount? This information is necessary for the businessman and they will study about the account. So that person is not knowing about the account, definitely they will facing the problems. So that person is know about the account. So what is the debit amount? What is the credit amount? After that, we know the users of account. How many users of account? So owner of the business, that person know about the account at the end of financial year. It means at the end of financial year, that businessman is know about their financial position of the business, and according to that they will plan the financial budget, right? So second, that is the potential investors who invests the amount in a business. Means investor is a person who some contribute amount to the business, so that person is able to know about the accounting information. So that person is understanding your financial position. So next person, that is the creditor who supply goods and services on credit to the businessman. So that person is able to know the accounting information. So creditor is our users. After that, employees who access the information about the accounting information. It means to assets already that person will engage in our business, so that person is knowing about the accounting information. After that, government. So government is acquiring the information about the account, because the assessment or you can say that fixation of taxation policy, for that government know the accounting information. Means government know about the information of your business, how much you purchase, sales. That information is required to fixation of taxation policies. After that, research holder, that person is also knowing the accounting information, because that person wants to make depth study of your financial information. After that, public. So public is a person, they know about the, means they try to know about the information about your business. According to that, they will engage with your business. That is about accounting users, means that person is knowing the accounting information. So next point, we will see that accounting cycle. So let's accounting cycle means start from the bookkeeping. So you should know about the bookkeeping. Bookkeeping means what? Bookkeeping is a recording of business transaction in a very systematic manner. So we call it as a bookkeeping. So definition of bookkeeping is the art of recording business transaction in a set of books. Means we are recording with the transaction. So you know about the transaction. Transaction means exchange of goods and services in the terms of money. We call it as a transaction. After recording of that transaction, we convert it into the journal. So you should know about the journal. Journal is a book of original entry where we record the transaction of cash book, purchase book, sales book, purchase return, sales return, bills receivable, bills payable, and journal. So these are the books, or we can say that these are the subsidiary books. So that record is keep into mind. Means first is a transaction, after that journal, thereafter ledger account, and last one, that is a trial balance. In the trial balance, we are preparing trading profit and loss account. So each and every businessman, they know about the profit of their business at the end of financial year. Suppose that businessman is earnings profit we called as a profit account, means that information is comes under the profit account. And suppose that businessman suffering from the loss, so that person is knowing about the financial position at the end of year, so that person is know about the loss suffering from the business. This is about the accounting cycle. Next, that is the meaning of account. So what do you mean by account? So already I will explain that. Art of recording, classifying the business transaction events which include the receipt, payment, cash, purchase and sales of goods on credit. So the transaction must be in the monetary terms, means in the bookkeeping only monetary transactions are recorded in the books of account. So there is no place for the non-monetary transactions. So it is an art of making, summarizing, analysis and interpretation of business transactions. So communication is the external and internal stakeholder and their decision making. So next, accounting concerned with the use of record or put their analysis and interpretation at the end of financial year. So it is the process of recording business activity to make change to the account according to our requirements. So at the end of, businessmen know about their income and expenditure at the end of financial year. Next, that is the attributes of account. So what are the attributes of account? It is the art of recording business transaction in a very systematic and chronological order. So transaction or events of the business must be recorded in the terms of money or monetary terms. So it is the art of summarizing financial transaction at the end of financial year. Next, that is functions of account. What are the functions of account? So function means it is a systematic record of business transaction, because in the accounting we are recording day-to-day transaction in very systematic manner. So it is helpful to businessman for protecting the properties of the business and communicating results to the users. Next, that is a various branches of account. So we know about the branches. So financial accounting, they will record only, or they will keep only the record of business transaction in a systematic manner. After that, cost accounting. So what is the role of cost accounting? Price fixation and operation efficiency. So we know about the cost accounting. It means leverage of account, profit and loss account. So all these things, the ratio analysis, that will things happen in a cost accounting. And last one, that is a management accounting. It is a analysis of decision making. So next, that is the advantage of accounting. When we are using the account, so we know about their benefits. First one, that is a replacement of monetary or replacement of memories. It means when we are recording the business transaction, so at the end of financial year we know about the profit and loss account. Second thing, we are use information for the taxation purpose, means at the end of financial year that information is helpful to the government to fixation of taxation policies. Then businessmen know about the sales. At the end of financial year, that person will know about the exact sales of that business. According to that, they will manage their capital. Next, that is the limitations. In the accounting, we record only the monetary transaction, because non-monetary transaction have no place in the books of account. So non-monetary transaction are not recorded in a books of account. So there is a drawback of accounting information. Then next, effect of price level changes no considered, means when the prices will be changed, their effect is not considered in the books of account. Then historical in nature, means when we are preparing the budget of finance or budget of your business, so we are using the historical information. Means we are using the historical information in the sense of we are record about the raw material, direct labor, direct expenses, indirect expenses, that all information we consider, and according to that we are preparing the financial budget. Classification. So different types of accounting classification. The account is classified in two manners, that is a personal account and impersonal account. So in the personal account, natural personal, artificial person and representative person, these are the three heads under the personal account. Means personal account are categorized in three factors. One is natural person, artificial person and representative person. Then second part, that is the impersonal account. So impersonal account includes real account and nominal account. So real account includes the intangible and tangible account. Let's see one by one. So natural personal account, an account recording the transaction with individual human being, is known as natural personal account. For example, Krishna's account, Ram's account, Gita's account, these accounts are related to the person, means natural personal account. Second part, that is a artificial personal account, an accounts recording financial transaction with the artificial person created by the laws or author is called as an artificial personal account. For example, college account. For example, college account, institute account, and other business account. That account is represented on behalf of that particular business. Second, that is a representative personal account. An account indirectly represent the persons or persons is known as representative account. For example, salary account. Then next, that is a tangible real account. So real account means, so that real account is related to the properties of the businessman, means that person have the assets and liabilities. So it is related to the that account, means person have a tangible assets. Tangible assets in the sense of furniture, machinery, these are the tangible accounts, and assets which can be touched, seen and measured, we call as a tangible account. Second part, that is the intangible assets. So intangible real account, and assets which cannot be touched physically but can be measured in the values. For example, goodwill of the businessman. So we know about the goodwill. Goodwill is a monetary terms and reputation of that particular business organization. We call it as a goodwill. This is not seen, but we are measuring in the terms of intangible account, right? Then golden rules of accounting. So personal account. So when we learn the account, you should know about the rules of accounting. It is a must. So first, personal account. What do you mean by personal account? Already we see that account is related to the persons. We call it as a person account, right? Or you can say that personal account. So what is the rule of personal account? Debit the receiver, credit the giver. It is the rule of personal account. Then real account. Debit what comes in and credit what goes out. So rule of real account, it means debit what comes in. So in the business we are related with the some assets. Suppose machinery comes in our business, furniture is comes in our business. So debit what comes in. So you should know about which items is coming into our business. That is a debit side, means that all assets are recorded in a debit side. And credit what goes out. Credit what goes out. Suppose we are purchasing some material for your business. So when we purchasing that material, for that material we are paying something for the supplier. After that, nominal account. Debit all expenses and losses, credit all incomes and gains. These all are the rules of account. So when we learn the accounting, you should know about the golden rules of accounting information. And last part, that is the accounting cycle. When we are recording the business transaction in a very systematic manner. So when we see about the definition, accounting is a summarized record of all business transaction in a systematic manner. After recording that transaction is converted into the original entry of books. We call it as a journal entry. After that journal entries, we are recording that transaction in a ledger. Means we are categorized that transaction in a different heads. After that, trial balance, trading and profit and loss account, and last one, that is a balance sheet. Thank you guys. We see next part in a next lecture. Thank you once again.